Corporate taxation rates applicable to qualifying free zone persons. Overview of taxation for qualifying free zone persons. The application of corporate tax to qualifying free zone persons introduces a dual rate structure that distinguishes between qualifying income and non-qualifying income. This structure is designed to maintain the benefits of the free zone regime for qualifying entities, while ensuring that non-qualifying income is subject to taxation consistent with the broader corporate tax framework. Qualifying free zone persons must be aware of the distinctions and how income classification impacts their tax obligations. Tax rates applied to qualifying free zone persons. 0% corporate tax rate on qualifying income. Qualifying free zone persons benefit from a 0% corporate tax rate on their qualifying income. This preferential tax treatment is a key aspect of the free zone regime and is intended to promote business growth and investment within free zones. 9% corporate tax rate on non-qualifying income. Any taxable income that does not fall under the definition of qualifying income is subject to the standard corporate tax rate of 9%. This ensures that income derived from activities not considered qualifying income contributes to the overall tax revenue, aligning with the principles of fair and equitable taxation. Determination of applicable corporate tax rates. The corporate tax rate applied to a qualifying free zone person depends on whether the income earned falls under the category of qualifying income or non-qualifying income. It is crucial for qualifying free zone persons to carefully assess and categorize their income to determine the applicable tax rate. Below is an outline of scenarios where the standard 9% corporate tax rate will apply. 1. Income attributable to a domestic or foreign permanent establishment. Income earned that is attributable to a domestic or foreign permanent establishment, pay, of a qualifying free zone person is subject to the standard 9% corporate tax rate. This is to ensure consistency with the tax treatment applied to similar income sources for other taxable persons, preventing unfair tax advantages. 2. Income from commercial property transactions in a free zone. If a qualifying free zone person earns income from the sale, lease, or other commercial transactions involving commercial property located within a free zone, and these transactions are conducted with a person who is not a free zone person, the income will be treated as non-qualifying income. As such, it will be subject to the 9% corporate tax rate. This provision is designed to ensure tax neutrality and prevent potential distortions in property market transactions within free zones. 3. Income derived from residential or non-commercial property located in a free zone. Any income generated from residential or other non-commercial property located within a free zone is considered non-qualifying income for tax purposes. Accordingly, such income is taxed at the 9% corporate tax rate. This ensures that activities related to residential and non-commercial real estate transactions are taxed similarly to equivalent transactions occurring outside free zones. Treatment of non-qualifying income for qualifying free zone persons. Unlike ordinary taxable persons, qualifying free zone persons are not entitled to a preferential 0% tax rate on the first AED 375,000 of taxable income if that income does not meet the criteria for qualifying income. For a regular taxable person, the first AED 375,000 of taxable income benefits from a 0% corporate tax rate, but this is not extended to qualifying free zone persons for non-qualifying income. As a result, all non-qualifying income is fully taxable at the 9% rate, regardless of its amount. This distinction emphasizes the importance of maintaining the integrity of the free zone regime while ensuring that income that falls outside the scope of qualifying activities does not benefit from preferential tax treatment. Qualifying free zone persons must therefore carefully segregate their qualifying income and non-qualifying income to ensure compliance with the applicable tax regulations and accurate corporate tax reporting. For more details, contact us.